I think that everyone is looking at November and saying that it has many implications for the market. And let's just focus on what has happened, what is happening there from from financial market standpoint. One is that historically elections has been always been connected to the market. There's plenty of studies that come out that say 90 days before elections, it often tells you which party is going to win. So do you put any weight to this, and do you prepare in any way just to such a binary event when you know that there's either one or other candidate wins?
Well, I mean, the first thing I would say is that didn't work in 2016, right? So 90 days before, we expected one result and we got a different result. So that doesn't always work. It's clear that the markets kind of build in expectations about what's likely to happen in the election. Based on your question, you're talking about the U.S. election in November. I mean, there's other elections. There's other important events like Brexit and other things that will have big impact on the markets. But if we look at the U.S., there is some expectation to date of who will win. There are polls and there are betting markets, and the betting markets are often pretty accurate. And at this point, Biden is expected to win based on the very unfortunate news today about President Trump in COVID. That has become more so. His chances have been reduced further in betting markets. But if you look towards the election, what do investors want to see? That investors, I think, first and foremost, want to have some level of predictability. So, I think that the idea that the election would be undecided, and I believe that probably will be the case for some period of time after November 3rd, is not a positive thing. The longer that it drags on, the more uncertainty is created. So that's not positive. Then if you look at the different outcomes, and again, they're not quite as binary as you say. Yes, they're very different approaches. One big difference would be China, which is factored hugely in financial markets and in U.S. economic performance, and that has been a really sore issue. And so the more chance of Biden winning, there is some expectation that U.S.-China relations could be improved, and I think that would be a positive for the markets. The other side, there is some expectation that a Biden presidency would mean higher taxes. Well, it certainly would. It would involve more regulation. It would have some form of environmentally friendly policies, to mention a few things. These might not be entirely favorable for markets, but they won't be implemented day one. Now, if the Democrats win the Senate as well and hold the House, then there's a good chance that markets will be a bit more concerned that some of these things might be accelerated. And by the way, just so everybody's clear, I'm talking specifically about how markets would react. That doesn't mean one or the other is better for the country. I personally hope Biden wins. That is my hope. I think it would be much better for America. But that's a different point of view than what's necessarily best for the markets in the short term. So I guess we just keep monitoring the election, and we're almost there. And I personally think we won't have a result immediately, and I think it will be a particularly messy process. And I don't say that with any pleasure whatsoever.